Mark, welcome back to the show. Always a pleasure to see you.
Dan, good to be with you.
All right, let us begin where we last left off, which was a pretty good point for you. November 2023 was the last time we spoke, and the market's done pretty well since then, and you've been pretty darn bullish, haven't you?
Yeah, I have remained bullish for the last 6 or 7 months, Dan, and part of the reason is the election year cycle, which has really been like a roadmap for us for the last 3 years. So what this tells us is that in a presidential election year, the market finishes strong. 16 out of the last 18 presidential election years, the market's been up, and there's a sweet spot in that cycle, which is the June to August timeframe work. So we were expecting a little bit of chop in the market, which we got in April when the tech stocks corrected. But we're entering that sweet spot right now. And even more to the point, from June 1st through the end of the year, the market is typically up in a presidential election year, an average of about 10%. So there's a lot of you can call it seasonality, but I prefer to call it the presidential cycle that's supporting a bullish outlook here.
All right. Sounds great. Thanks for being with us, Mark. I mean, what else? What else do I need to know?
Good to be with you.
No, there is more to that. So if it's bullish because it's a presidential election year, do you factor in or think about or try to prepare for a surprise to that? I mean, elections can surprise people. They sure surprised the heck out of a lot of people in 2016. Um, how do you feel about the prospects for an election year surprise this year?
Well, the market is typically very nervous in the 4 to 6 weeks leading up to the election. So in 2016, the market was actually down for about a month
Mm.
heading into the election. And then after Trump beat Clinton, the market took off again. So, yeah, there's always the possibility of a surprise, particularly in this overheated political climate. But and that's why it's really the June to August period,
Mm-hmm.
then a bit of a pause, and preparing for a potential surprise, and then finishing the year strong. So, yeah, a surprise is possible, but it would be a buying opportunity. It's not something that spooks me.
Oh, okay. Um, so as we let's keep on this election year theme just as long as we can, as long as as you tell me it makes sense. So the next question then is, does it make sense to look at specific sectors in an election year?
Well, I prefer to look at more of a real-time snapshot of the sectors because they pretty much tell us everything we need to know. And right
Mm-hmm.
now, even though the headlines are dominated by tech and obviously AI and the software that's going to benefit from these AI chips that Nvidia is making,
Mm-hmm.
you also have financials, utilities, healthcare, strong. So
Okay.
it's not, the market is, in a sense, broadening. It's just not garnering the type of headlines that you would expect. But
Really?
for
Yeah.
instance, in the insurance industry, lots of attractive stocks based on the Chaikin Power Gauge rating. Again, when I talk about attractive or a good sector, it's based on our proprietary 20-factor power
Oh,
gauge
insurance
model.
stocks. That's
Right. I
exciting for
guess
me to
we
hear, believe it or not. I do like the insurance business. I mean, because we keep seeing, I think there was a report I saw the other day about more and more people actually publicly referring to, insurance prices being so far up, 40% for their premiums and whatnot. You got to think that the
hmm
right businesses are benefiting from that in insurance.
Absolutely. I mean, and it's not just property and casualty. There's a recent spinoff out of AIG called Corebridge Financial, which just has uh, really positive um, power gauge rating, been outperforming the market since it was spun off back in 2023. And there's opportunities
I
everywhere. You
just
just
want to,
have to
I didn't
dig
want to
them
get
up.
too off track from the presidential cycle there. I did want to ask you about that too. Like, so my question about it is obviously the track record of it's there, but like, why, the why this year in this leading up to elections does the stock market tend to do well? Is it just the promise of politicians, no matter who they are, heading into November, or is it something else?
No, I mean, in this case, it's the fact that the Fed has stopped raising interest rates, and whether they cut in the fourth quarter or not is still to be determined, and strong corporate earnings. So you've got this AI boom, which is driving a whole sector of the market in the cap weighted ETFs like SPY and QQQ. They're dominant.
Mhm.
And therefore, any money that's coming in, there's an awful lot of money flowing into the market, over 96 billion so far in 2024. A lot of that goes into these passive funds that are capitalization weighted, and they've got to buy Nvidia, Apple, Microsoft in proportion to their weightings in the ETFs. But the bottom line is earnings are going up and profit margins are improving and inflation is going down in spite of the headlines that you're seeing about stubborn and so forth. You've got a number of very positive factors driving the economy. And so I think in any election year, something is a hook that the market keys on. In this case, it's earnings and, if not a easing by the Fed, certainly no more tightening, and that's very bullish for stocks.
Hmm. So I see a lot of commentary about it anyway, about the incredibly narrow breadth and narrow leadership. It's never been like this. The market has never been so concentrated, many people are noticing. That doesn't bother you.
No, it's just an oddity. I just read a study today. There are 5 instances since 1990 when we had this kind of breadth, although uh, the S&P and the Qs are much more overbought. And in each of those 5 instances, the market was higher 6 and 12 months later. The period from, say, 2 to 6 months is choppier, where some years are up and some are down. But I actually think there's going to be a broadening out, and that's part of what we're very excited about this upcoming product launch, because I think stocks like Nvidia and Google, Microsoft, Oracle now, Adobe, they're all riding the AI wave. Uh, Very, very positive impact on earnings, but I think it's going to broaden out. And that's what we're really looking for, the sort of undiscovered stocks that aren't in the headlines right now.
What tells you that? Is that another sort of Chaikin power gauge reading or something else?
It's something else. There are a series of momentum patterns that triggered in December of 2023 and January of 2024. The most obvious one is the percentage of stocks in the S&P 1500 index. So that's large cap, mid cap, and small cap. 90% of those stocks in December were above their 50-day average. And every time that that's happened, the market's been higher 6 and 12 months later, and mid caps have outperformed large caps. So that was what clued me in. And then you had the mid cap index making a new high after failing to do so for a year. So a lot of things are falling into place that tell me this market's broadening out. Now, if you look at the headlines, you'd never know it, but that's why we think there's opportunity coming up very soon.
All right. And you already named some sectors. What did you say? Utilities, healthcare, a few other things. Um, do you focus your bets on those or no?
Well, we'll be looking for the strongest stocks in the industry groups. Utilities is a really special case. Normally this is a defensive sector,
Yeah.
and these stocks tend to go opposite to the tech sector, but it's all about power. AI chips and AI data centers require power.
Mm-hmm.
And so there are a lot of alternative energy companies in the utility sector that are generating power or capable of doing that for AI data centers. So it's sort of a different ball game with utilities. I was surprised, but my partner Pete Carmesino has picked up on that in his Chaikin Power Tactics, where he's looking for these shifts. And there are a number of stocks in that sector that just are dynamite, and also in healthcare. So we're very opportunistic. It's
Hmm.
we want to find the strongest stocks based on the power gauge in the strongest sectors and industry groups.
Yeah, throw consumer staples in there, and those are three normally thought of as defensive sectors,
Yeah.
but you like them.
Well, healthcare has always been a problem for me and an opportunity because was defensive, but there's really a lot of growth opportunity in healthcare.
Yeah,
So, I mean, just look at Eli Lilly, and that is not a defensive stock or a defensive sector anymore. But
right.
we'll find them wherever they come up. There's still some software stocks that haven't gained a lot of public awareness in this mid cap sector. And when I talk about mid caps, I'm talking about stocks with market caps of $2 to $10 billion roughly.
Interesting. Wow, that harkens me back. I remember attending the Value Investing Congress, and I wish I could remember the guy's name who showed up every year and said his fund was totally focused on mid caps, and they were kind of a focused, value oriented firm, and they did really well. And I remember thinking, why doesn't everyone imitate this guy? Because he did so well. But there's a lot of good brands down there, and a lot of good names in the mid caps that they just don't get as much press because it's kind of a mega cap world for the past several years, isn't it?
It is indeed, and when you think about it, what is a mid cap stock? Let's just look at the S&P mid cap 400 index. These are stocks that are on the verge of being added to the S&P 500.
Right.
So they're your next wave or next generation of stocks that are going to be on people's radar screens. But there's another reason that I like mid caps, and of course, when I see a trend or an indication that things are going to change, I always try and figure out why. Apropos of what Corey asked before, and I think mid cap companies are in a position to implement AI and be more nimble than some of the large companies in the S&P 500 who have legacy software or a much more layered management structure before they can make changes. So, for instance, a friend of mine who was on our board until 3 years ago is on the board of a private equity company, and they have an annual conference in Florida, in Naples, every January. And at this year's conference, there were 23 CEOs from the various private equity investments that they have, and there was a whole panel devoted to implementing AI in your business. And the message from the private equity management was, you've got to be using AI to increase productivity, the supply chain, make it more efficient, have better interactions with your customers. So I think mid-cap companies are in a unique position where they can implement AI and boost profit margins. And I think that's what the next 5 years are going to be all about: increased profit margins across the board.
That's interesting. Yeah, I haven't heard
Interesting.
that kind of explained
Yeah.
that way before, that these mid cap, smaller companies will be
Right.
able to implement whatever technologies, whatever solutions quicker. Which brings me to a question I did want to ask you about, like with AI. Um, how does it compare to, like, what comes to mind for you? I mean, obviously you have like 5 decades of experience at least, right? In the markets. How does that technology, how does it compare to other technologies that you've seen? Like what comes to mind?
That that is a really interesting question, and I compare the AI boom to the introduction of the Netscape browser in 1995. The market leading up to that introduction had been very choppy in terms of both inflation, interest rates, the economy. Netscape browser was introduced, and if you look at what happened between 95 and 2000, you see two things. Inflation went down, profit margins went up, and a the Netscape browser basically democratized the internet. And people started adapting their business models to start selling online or interacting with their customers online. And I think we're in a comparable situation now where the AI boom is going to trigger a wave of profit margin increases for the next 5 years going out. And it's so comparable to that period. We're probably in 1996-7 right now. So there were some pretty big drawdowns in 97 and 98 in October. But we all know what happened in 2000 when the tech sector blew off. So it was a good period to be invested in stocks. And I think that's where we're headed now.
Wow. So, the overall market's like rather exorbitant valuation by various measures doesn't bother you at all.
Well, it's that seven stocks in the S&P that are very highly inflated. I think profit margins are way up. On the other hand, they contribute 27% of all the earnings to the S&P. You look at the other 493 stocks, and PEs are pretty much in line with the norm. And then when you go down to mid and small cap stocks, PEs are actually below historical norms. So I always worry about valuation. We all know what happened to Cisco in 2000.
That's right.
And everybody's comparing Nvidia's chart to Cisco, but Cisco was making a machine basically that was put into data centers to drive the internet demand for processing power. This is a whole new ballgame. And sure, Nvidia is very richly priced, but look at their earnings growth. So, if PEs are all about forward growth, then so far so good.
Yeah, I saw something that says semiconductors generally, it's not just Nvidia, it's semiconductors generally are set to become the biggest piece of the S&P 500 soon at about 11% or so. Right, still currently just a hair behind software, which has been the dominant one for a while.
Right.
And the Cisco example reminded me of that because its industry was the leading one in March of 2000. Generally, historically has been a bad sign for longer term returns, but in the short term, it sure can get pretty exciting, can it?
Indeed, and profit margins are the key to future returns.
Yeah.
And if we're entering a period where, because of AI, companies are more profitable, they cut some people where the fat is there, and then they implement AI and, as I said, supply chain management, uh, customer support, AI, HR, and so forth. Profit margins are going up. That's where I see this headed. And in that scenario, valuations start to readjust to better profit margins. So valuations typically are not as much a function of earnings growth as they are a combination of earnings growth and profit margin growth.
So generally speaking, when we get these big technology revolutions, really, um, people they become more valuable and more productive, although there is this aspect of what's famously known as creative destruction, right? And you mentioned, possibly replacing people, almost definitely replacing people in this case. Uh, I wonder if and of course I'm hopeful that we will get that effect, right? And people will find ways to be more valuable than whatever machine-like task they're currently doing, that can be replaced by artificial intelligence-driven software and hardware. Um, is there? It makes me wonder. there should be an opportunity there. In a healthy economy, there should be an opportunity there for people who are no longer doing this lower value thing. Um, but it makes people nervous, doesn't it? It makes them very nervous.
It does indeed, because it makes great uh, fear headlines, and that's what gets clicks, and that's what our world has devolved into in some
Right.
sense. But I don't know where these workers are going to go, and some of it's just superfluous. Some of the big tech companies have, and Elon Musk, of course, called out the people at Twitter that they just got a lot of fat, a lot of people sitting around not doing very much, and they're starting to cut. They were starting to cut before AI, so this isn't, strictly speaking, just related to AI. But I
Mhm.
mean, think of one area where really I've recommended some stocks that haven't done well in the short term, and that's the consultants, the IT consulting
Mhm.
business. They're going to be in big demand, because if you're a mid cap company, for instance, and you want to implement AI, what are you going to do? Well, you're going to go to one of the big consulting companies, McKinsey or Gartner, and
Accenture,
try and
yeah.
get a little bit of knowledge, Accenture. So I think consulting is going to become a big growth industry. It already has in many cases. The stocks sort of ran ahead of themselves in the last quarter of 2023,
Yeah.
first quarter of 2024. But that's a growth area that I think is related to AI.
Yeah, and an area where there's plenty of fat to cut, I have to say. There's a lot of people in
Yeah,
that business who, you know how this works, Mark. They show up with their charts and their ideas, and they've never done anything but being a consultant before. They're going to have to get real jobs, aren't they?
personally, they are. I'm not a big fan of consultants in
Me either.
general, but I think in the case of AI, they are essential, because how is a small company going to have the internal resources to figure out where, what, and when to
Sure.
do
Yeah,
this?
Yep.
I've heard some.
Agreed. Yeah.
I've read a couple articles where um, some AI, I guess I think AI consultants have actually said that a lot of workers themselves are becoming the first people to try these AI tools without just on their own and seeing how they work. And so it sounds like what you're saying sounds like just a extension of that as it filters up from the bottom into management.
Yeah, I mean, here's a very small sample. AI voice generation can actually save time. So, for instance, they could clone my voice. And if I've got a routine message to deliver, instead of me sitting in front of a studio like this, but without the benefit of two knowledgeable hosts, um, I can just write the script, and an AI voice generation program will make it sound like Marc Chaikin. So, but why is that good? Because I'm freed up to do more productive things like find winning stocks for people. So it's just a changing world. And as long as we recognize that there are pitfalls, and there are going to be bumps in the road in terms of fake videos and so forth, we're going to be fine. We lived through Facebook. We can live through anything.
Right. Yeah, that's right. Maybe we should rename the podcast the Turing Test Hour. We can figure out if our guests are really there or if they're AI bots.
There you
We'll,
go. Right.
Evidently, it doesn't take much
we'll
sound
we'll
or
formulate
video to be able to keep you going when you're not there.
to
So,
get a sample.
um,
Yeah, that's right.
Yeah, that's really amazing. A little scary. That part is scary to me. But
It is. Um, I, I mean, that's obviously an amazing accomplishment. I have to say, I'm still not real impressed with the chatbots that like ChatGPT and so forth. I keep asking them if they know who I am and if they can, you know, make an investment recommendation in the style of Dan Ferris, and they know who I am, and they seem to know better than ever who I am. Um, but they still can't. They still have no feel for what I think or what I've published or anything like that. So I'm figure maybe it's because it's all behind a paywall. So we'll have to get some of the, but we have free stuff. Actually, I'm wrong about that, aren't I? Because our digest goes out to the whole world. So I'm not real impressed so far, but I understand lots of people are doing amazing things with it. And and
Well, I did an experiment in the early going with the second generation of ChatGPT. We're now up to four.
mhm.
I said, write a research report on XYZ company in the style of Stansberry research,
Mm.
and they were able to do it. And as a test, I said, now write one in the style of David Ogilvy, who's one of the great
Oh yeah.
advertising gurus, and they were very different, very different. So not necessarily ready for prime time, but I agree with you. They know me because of the power gauge, and there's a lot of public, uh, sort of information or dialogue about the Chaikin power gauge rating. So they can dive in and find the power gauge.
Yeah, it is.
I don't know.
Uh-oh. Yeah.
Yeah, we'd like to
Yeah.
ask them
Yeah.
how they have access to the power gauge. Maybe we should ask
I-
ChatGPT that
yeah,
question.
I was just gonna say it is exciting, these new tools that are out there, and companies that some of them aren't even created yet. Um, have you guys seen this
Yeah.
Perplexity AI? It's called.
hmm
I
Yeah.
have.
Yeah.
I
So
have
that's,
very,
I
very
mean, I've
strong.
felt
Yeah.
in just the work I do, writing, trying to keep up with stuff every day, was becoming harder and harder to do that. The last couple of years, or last 5-10 years, how there's just so much information out there. And I feel like that tool, which by the way, Stanley Druckenmiller said he used to research Argentinian stocks after Javier Milei got elected, and he decided to buy them, just based off Perplexity's recommendations, I guess, which I wouldn't suggest to people. But um, like
Yeah.
that has helped me just keep up with.
Stanley's a former
You
client.
type in a question
Yeah,
there, and there's new. It gives
absolutely.
you the sources, it gives you the news, and I don't know, that
Oh
kind of
yeah,
thing. That's helpful. I mean, that's like leveling the playing field for me almost.
very. Yeah. Stanley Druckenmiller was a client of mine when he was at the Soros Fund in the late 80s and early 90s. And I can promise you he didn't buy stocks just because
Yeah.
All right. Well, that's what he said
Perplexity
on
told him to.
CNBC.
But
But
it's
yeah,
a great, it points, I know, it points you in the right direction for
yeah,
sure. For sure. But I mean, the trick is finding stocks to benefit from AI. And, we're seeing it in a variety of industry groups. Obviously, healthcare, it's going to be a major breakthrough tool to, create new drugs, but also in finance. We found a company that has a digital banking platform for regional banks, and they're starting to use AI to make the customer interaction better. So you can find these companies across a broad spectrum of industries and energy. AI and energy is going to become very big in terms of optimizing pipeline flows and maybe convincing some government somewhere to let us build more pipelines so that we can get our natural gas where it needs to be, which is in the consumer's hands or exported. But AI is being seen across a broad swath of industry groups already being used.
All right. And we're nowhere near. I mean, Nvidia is richly valued and had an epic run, but or maybe rather than asserting, I'll just ask the question: are we anywhere near an AI bubble in your opinion?
That's above my pay grade because
Oh.
you're dealing with psychology, and that's a tricky bit. But let's look at another stock that's actually in our 2024 portfolio in the Chaikin Power Gauge Investor, and that's Qualcomm. And
Oh.
since we recommended it in February, it's up about 50%, best performer in the group. And I don't see anybody talking about Qualcomm as part of the AI revolution.
No.
And Qualcomm is sort of the intersection of AI and mobile devices. There's a company called Zebra Technology, which has the scanners that they use in the supermarkets to read the barcodes,
Mhm.
and they're handheld. Qualcomm is now putting chips into the Zebra handheld scanners, and it enables the supermarket manager to order strawberries if they're out uh, without connecting to the internet using Qualcomm's AI chip. So, and you don't see anything about Qualcomm associated with AI, or at least not in the major media. So, uh, Qualcomm, in my view, and it's not a recommendation, obviously, because we're talking to a broad audience here, but it is
Right.
in our 2024 portfolio. And I think it's got a 3-year runway where their chips are going to go into things like handheld scanners and computers as well. So there's plenty of pockets of opportunity away from Nvidia. Will there be a bubble? Sure, always is.
Right.
But
All right.
at least it's based on earnings. In
Initially.
1969 or 73, I shorted a stock called Four Seasons Nursing Homes in my personal account. I was a stockbroker. It was in Oklahoma, and I think they had 4 nursing homes, and it had a bigger market cap than Montgomery Ward or Sears or something. And unfortunately, it went. I shorted it at 99, and I covered it at 119 and 7/8. A lot of shares for a young kid. That was one tick away from the all-time high, and 12 months later, it was bankrupt. But there were a whole group of stocks like that in, I guess it was 70. It was a company called Levitt's Furniture,
Oh
which
yeah, I remember Levitz.
indeed, they had about 18 furniture stores, and they were bigger than Montgomery Ward
Yeah.
in terms of market cap. So, this has happened for time immemorial, but if you invest by always looking for shadows around the next corner, you're never going to be in the market. You're never going to make any money.
Right. Yeah. Yeah. Today is always the hardest day to invest, my friend Chris Mayer likes to say.
Yeah,
Right.
exactly.
Right now is
And
always the
that
hardest
doesn't
time.
mean that doesn't mean you throw caution to the winds. And I
Hmm.
respect the work that you do, Dan, where you see pockets of insanity in the market and shy away from them, and that's good. I mean, that's good for investors. And if you have something like the Power Gauge rating on your side, and you're looking at Dan Ferris's research, it's even better.
There you
So,
go.
anytime you can eliminate some of the losers or the potential losers, you're a winner in the stock market.
Right. That's not that is not a sexy thing, but it's got teeth, doesn't it? Eliminating losers.
Yep.
Um, Sort of counterintuitively, a way to make money is eliminating losers. Um, so I didn't know we were going to spend all this time talking about AI. We just can't help ourselves, though, can we? It's like talking about
Apparently not.
Netscape in 1995, I guess.
But can we talk for a minute about the upcoming product launch?
Yeah, let's do that. I'm sorry, we got off on that AI thing, but yeah, tell me about this. You mentioned the new product briefly several minutes ago, but let's get into it. What is it?
It's called Marc Chaikin's Power Picks. And for the first time, we put my first name in a product. And the reason is this is very personal to me.
Okay.
This is what I went to Wall Street to do, pick stocks. But unfortunately, I was with a big wirehouse or investment firm back then, Shearson Hamel, and they said, "You're not going to be one of those young hotshots who wants to pick stocks." Oh, no, I'll sell the firm's research. But what I always wanted to do was pick stocks. And I like discovering new stocks. I'm entrepreneurial, and I think that the mid cap sector is sort of populated with entrepreneurs who've been successful. And so we're coming out with Marc Chaikin's Power Picks. And in those, the monthly reports, we're going to zero in on what we call hidden gems. Mid cap stocks, sometimes small cap, that really are undiscovered but have great valuations, bullish power gauge rating in the right industries, and so forth. So, very excited about the launch because it's almost like completing the circle for me to be very deeply involved in finding hidden gems.
Hidden gems. Boy, I'd like to find a few of those. I can't wait to see what you come up with. I could use a few hidden gems. We are uh, just in the work I do, we're kind of running out of thoughts. Maybe we need to start reading your stuff. Well, we found a few things on the short side, but that's a different subject. Um, so wow, this is a personal thing. It's got your first name on it. Um,
Yeah.
I mean, is there anything different about it versus, what are the differentiating factors between, you know, Mark Chaikin's Power Picks and, you know, just sort of power gauge output, let's say?
Well, that's a good question, and it starts with the market cap segment that we've chosen to focus on, which is mid cap stocks.
Hmm.
And then we're looking for stocks where AI is already making a difference. So uh, they're not going to be AI stocks, but they're going to be companies that are using AI, for instance.
Hmm.
I mentioned a company with a digital banking platform that's potentially going to be in our launch portfolio of five stocks. We're looking for healthcare names where AI is starting to play a bigger role in their business. So there are a lot of software companies that have customer facing software in the healthcare industry, and they're all using AI right now. So we're going to look for um, really special situation, hidden gems, stocks that aren't on everybody's radar screen. I mean, there are some mid-cap stocks like Supermicro. Well, it's now in the S&P that are on everybody's radar screen.
Sure.
But as you go deep into it, use the power gauge, you find some really interesting names, and that's what we're going to be focusing on.
Do you have that?
Our other I'm sorry, our other
Go ahead.
publications are much more structured in terms of top down, strong sectors, strong industry groups, strong power gauge.
Hmm.
And those may be characteristics of our hidden gems, but the focus here is really on like prospecting for gold nuggets. We're looking for the big finds.
Right. You mentioned that you're going to launch the new product with a five stock portfolio. Do you have the five names picked
Yes,
out? Sounds like you have at least one of them.
we do. We're launching on the 26th, so it's getting pretty close, and we've got the five stocks picked out.
All right.
Hoping the market pulls back a little bit, so we get to buy them, and at a discount to the recent highs that we've seen in the market.
Sure, but if your bet on seasonality is good, you couldn't launch the thing at a better moment. It seems. I mean, uh,
I mean,
June of an election year
there's
sounds perfect.
it's a good time. And July, by the way, the first
Yeah.
2 weeks in July are the best single 2 week period, going all the way back to 1928 in the stock market, year in and year
Wow.
out.
Oh, best single 2 week period, regardless of election year or anything else.
Any year.
Wow.
Wow. I'm hearing
So
I don't think
1996,
I've heard that before.
97, broadening market, AI going to boost everybody's productivity. Like, is that what I'm hearing? Is
yeah,
that correct? Okay.
you are. Sounds like you're going to write something up. I love it.
Yeah, that's right. It sounds like I'm going to
Yeah.
go buy
Right.
some
I know.
stocks.
Like,
That's what it sounds like.
I'm more bullish
Yeah,
now.
no,
Yes.
Corey,
Yeah.
that is the well, I've been consistent. Recognize even pullbacks are hard to find in an election year. I've heard people talking about, oh,
Mm.
we're going to get a 5 to 10% pullback. It's inevitable. Not in an election year, not necessarily. So I think if we just saw a 3% pullback recently, that in the major averages, that usually translates to 5 to 8% in individual stocks, especially smaller cap names that are more volatile. So we're looking at as a buying opportunity. Whatever pullbacks we get on a short-term basis, a la Dan's comment about seasonality, the way we look at it, I see that as a real buying opportunity.
Yeah, you're not alone in this. I've talked to a couple other folks who do. Well, obviously they don't have the power gauge, but I would say they do generally kind of similar work to you. And are saying very, very similar things. In fact, one of them is pointing to like this week and maybe next week, hoping to get a little pullback to get really bullish and really sort of pile into it and take advantage of what he expects to happen for the rest of the year, which is exactly what you expect. Um, so,
Yeah,
gosh,
no, Goldman Sachs had a very bullish piece out late last week,
yeah,
and they talked about a flood of passive money that's due to come into the market in early July,
right,
uh, based on some of these passive volatility strategies. You know, when volatility gets low like it is now, a lot of these strategies, and there's trillions of dollars being deployed based on computer models, have to go into stocks. And so in June, you may see some front running. I mean, smart people know this is coming, and you may actually be front running that right now, by the more aggressive hedge funds and trading desks. So Wall Street's become a little bit more complex, but at the end of the day, it's all about earnings and profit margins. The rest is just noise.
yeah. And it's funny because for some years now, there's been this constant talk. Actually, Jeremy Grantham from GMO is a typical voice in this. He constantly points out that profit margins are what he calls the most mean reverting data series in all of finance. And the mean reversion hasn't come. It simply has not arrived. And we don't count really COVID. That was sort of an anomalous thing.
Right.
It's I dare I suggest we're in a new era. I hate to use the term, but it seems like um, the long expected mean reversion has not arrived. And if you're right about AI, Mark, what you see over the next few years, again using that sort of 1995 analogy, here it's not going to arrive for 3 or 5 more. So
Exactly. Take a look at profit margins between 1995 and 2000, and you'll
yeah,
get a sort of roadmap or an analog to what I think is going to happen today. And you summed it up really well there, Dan. So
yeah.
um, it's a good time to be invested, as a friend of mine in Philadelphia says, who is always fully invested but has a sort of side portfolio of smaller stocks. And he said, Mark, it's a good time to be in the market.
Did does he do similar work to you or no?
He fundamentalist, was a partner of Alex Brown, did fundamental research, was a floor trader,
Hmm.
but he uses the power gauge,
Oh, he used the power game.
and
Okay.
he does, and so do his money managers at Wilmington Trust. So um, yeah, if you combine the power gauge with any other discipline, whether you're doing your own fundamental research, whether it's Morgan Stanley, Goldman Sachs, your friends, you combine the power gauge as an overlay, you've got a really powerful tool to narrow the playing field. Because you and I both know that to make money in the stock market, you need two things: you need a plan and you need a focus, and have a repeatable process. And for my friend in Philadelphia, the power gauge is his final filter. He may not go looking for new stocks with the power gauge, but when he gets an idea himself by watching CNBC or reading, and he's 84 years old and a very active investor, he then filters it through the power gauge. So if you filter anything through the lens of the power gauge, you're going to improve your results. And that's a story I've been telling for 10 years and hopefully be telling it for another 10.
Right. And as a reminder, just to listeners, although I bet most of them heard of you by now, the power gauge is Mark's system that he first time he told me about it, it blew me away. What did you say? It's 80% fundamentals. Did I?
Exactly, and only 20% technical. And it's based on the factors that my clients, like Stanley Druckenmiller, looked at. I had a lot of successful investors, not just hedge fund people. And I was privy to what they did because back then we were showing them how to use technical analysis in their decision making, because that was our institutional brokerage terminal. Um, I learned what they looked at. Some were value investors, looked at PEs and book values. Some were growth investors, Some were looking at back then things like earnings surprise and analyst earnings estimate revisions. All of those successful strategies and those factors have been distilled down into the 20 factors in the Chaikin Power Gauge rating. And it stood the test of time. It launched in 2011. So
Wow.
13 years in, and it's still working with
Wow.
no major revisions. So it's not curve fit. It's based on how Wall Street works, Dan.
That's impressive that it can undergo no major revisions in 13 years.
Well, you were way ahead of your time, I
was,
think, right?
Yeah, that's right.
Thank you. Quantitative analysis was not on anybody's radar screen.
I want to ask you, before we close out here, I mentioned Stanley Druckenmiller. Tell me a story about him as a client, working with him, what you learned, or something that comes to mind.
I learned you damn well better be prepared when you were in a room with him, because he was the smartest guy in the room. And he does like to sail. I had a sailboat that I chartered from a friend down in Virgin Islands, and one year I couldn't use it, and Stan rented the boat and went out with a captain. So he's a good sailor, and he is smart.
Yeah, whenever I hear him talk, he obviously does interviews and presentations occasionally. I mean, he just seems like, I don't know. I'm obviously quite a bit younger than him, but I find myself agreeing with like almost everything that he says. It's just either is it like, I don't know if he's like one of the lone voices saying it, or I don't know, but I just like listening to him, kind of like you. So
I do too. But you're very kind. But be mindful that when he was bearish in 2023 in the beginning, or at least leaning toward a big correction, he was buying Nvidia. So on CNBC, he was telling people to be cautious. But if you look at his trades, which someone did, analyze them, he was buying Nvidia back in the early part of 2023.
Right. When he claims not to have been able to spell it, I couldn't spell it, he said, but I was buying it.
I love that.
Yeah. I've learned to listen to Stan through a particular filter where he has these usually more bearish kind of long-term concerns, things like just the usual debts and deficits and government spending and so forth. But then, as you point out, there's the other question, which is, what are you buying right now? And that's a totally different question for him. So
that's really perceptive on your part.
You got to learn to separate.
Absolutely true.
Yeah.
Well, I mean, Jeff Gundlach's another guy. He's out there.
Same thing.
Panning the economy, but he's buying stuff.
Yeah.
They say what, sadly, they know how you get on CNBC, and that's by being a bit controversial. So, nobody's getting invited back to say, "Hey, I'm bullish and I'm buying Nvidia." That doesn't.
That's right. That ship has sailed to get invited back for that trade. All right. Well, listen, Mark, it's great to talk with you. We do have our final question to ask, which is the same for all guests. You've answered it a few times, and it is simply this: if there were just one thought that you could leave our listeners with today, what would it be?
Vote in November of 2024. This is the most consequential election in our lives. Whatever your point of view is, vote and get your friends to vote.
All right. That's a simple message. Thanks a lot for that, Mark, and thanks for being here. It's always a great pleasure to talk with you.
It was fun for me, Dan and Corey. Thank you so much. Look forward to the next time.
All right. Folks, as you heard today, our friend and 50-year stock market expert, Marc Chaikin, is preparing for a critical announcement. He's just spotted a dramatic shift in the markets, one that he expects will likely determine some of the biggest stocks of the next decade. And now, for the first time ever, he's unveiling what he believes is the perfect strategy for getting ahead of it. One he's been waiting to share his entire career. Let me repeat that. Marc has been studying this market phenomenon for decades, and it is by far his number one favorite way to profit from the system he spent his lifetime creating. In other words, the folks who understand this stand to make a lot of money. Within days, Marc will show you exactly what's happening and how his team can help you build more potential wealth than you ever imagined. So if you do one thing for your wealth this summer, make sure it's this. Head to www.june26warning.com. Again, that's www.june26warning.com, where you can get all the details directly from Marc. I consider this a must-see for all Investor Hour listeners. One last time, that's www.june26warning.com.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.